The time has come to start the meeting for institutional investors and financial analysts on the second quarter for fiscal 2018 for Hitachi Limited. I'd like to introduce the speakers to you. Mitsuaki Nishiyama, Senior Vice President and Executive Officer, CFO. Tomomi Kato, General Manager, Financial Strategy Division. Yasuo Hirano, Executive General Manager, Corporate Brand and Communications Division. Mr. Nishiyama will be explaining the results of the quarter. I would like to refer to the PowerPoint presentation. Please refer to 1-2. This is the consolidated statement of profit or loss. And the middle column is the first half. Revenues was 4,491.8 billion yen, which is 115.3 billion yen increase or 3% increase year-over-year. Second line is adjusted operating income, 344.5 billion yen, increased by 41.3 billion yen, increased by 14%. And EBIT was 352.3 billion yen, increased by 55.8 billion yen. At the very bottom, net income attributable to Hitachi Limited stockholders, 192.9 billion yen, increased by 32.3 billion yen, 20% increase year-over-year. Regarding the operating income from the second from the top, last year was 6.9%, and it has improved by 0.8 percentage point to 7.7%. And in terms of information telecommunication systems, social infrastructure, and construction machinery and high functional materials increase. And in terms of operating profit, the information and telecommunication systems, social infrastructure, industrial system, as well as construction machinery contributed. Now, in the second quarter, as well as the first half, we have achieved the highest record, except for revenues. Now, 1-3, which is the factors affecting changes in revenues and adjusted operating income year-over-year. Left-hand side for revenues. Please look at the arrow facing downward. Impact of reorganization of Hitachi Kokusai Electric. Impact of negative 72 billion yen. Foreign exchange. The dollar yen was stronger by 1 yen compared to previous year. So the impact was minus 2 billion. Business scale expansion was 189.3 billion yen positive, or increased by 4%. Left-hand side is the adjusted operating income, similar to sales. The impact of reorganization of Hitachi Kokusai Electric was minus 10 billion. Foreign exchange, minus 1 billion. In the absence of these, organic improvement was 52.3 billion, or increase or improvement by 18%. Next page, please. Revenues by market. Looking at the outside Japan figures. Second line from the top is the outside Japan. 52% was last year's result. It has increased to 53%. And year-over-year increased by 5%. China increased by 2%. ASEAN, India, and others plus 3%. North America 5%. Europe 10%. In all these areas, we have seen an increase. In China, construction machinery and industrial system grew. ASEAN, in India, Hitachi High Technology, Hitachi Chemicals, as well as Hitachi Construction Machineries increased. North America, industrial products, industrial equipment with the acquisition of Salt Air has increased. Construction machinery increased. Europe increased by 10%. It increased in railways, as well as information telecommunication systems and construction machinery. In terms of construction machinery, we have seen growth in all geographies. 1-5, balance sheet. At the very top, total assets, 10,060.1 billion yen, minus 46.4 billion yen. This is because of construction machinery. Inventory increase occurred. but Kokusai Electric was deconsolidated, and the balance sheet has become smaller as a result. CCC cash conversion cycle is shown here, 66.7 days. The midterm management goal was 70 days, so we have been able to maintain this. And stockholders' equity ratio, 34.3%, debt to equity ratio, 0.26 times. In terms of financial indicators, the guidance is 0.5, 0.5. So we have made significant improvement. Cash flow increased, as well as assets have been reduced. Macroeconomic impact, as well as business risks, are areas that we have to make preparations for. Therefore, we shall continue along these lines. And in terms of ratings by S&P, for long-term rating was improved from single A to single A, from A to single A. And in terms of RNI, there was an improvement from stable to positive in September. So for S&P, went from minus single A to single A. Now I'd like to move on to talk about the cash flow from investing activities. For the operating activities, the acquisitions have fallen off, and that is the reason why it has decreased in terms of expenditures to 211.9 billion yen. Free cash flow was 69.5 billion, which is an improvement of 25.5 billion yen. Now I would like to talk about the specific segments. At the very top is information and telecommunication systems. In terms of revenues, increased by 3% year-over-year. Alexa Networks stock transfer was a negative factor. However, expansion of the system integration business has had a positive impact. Operating income was increased by 22 billion yen. System integration profitability improved, and hardware or IT platform and products improved in terms of profitability. Therefore, improvement of 22 billion yen year-over-year. Next is social infrastructure and industrial systems, increased by 6%. And this is because of the increase in revenues of railway system business, and Salway acquisition led to profitability improvement in industrial and distribution field. Profitability improved as well, increased by 24.1 billion yen. This is driven by the decrease in sales price in elevators and escalator business in China, which is negative. But there was increase in revenues of railway systems, and in industry and distribution field, we have seen improvement in profitability. Therefore, adjusted operating income improved by 24.1 billion yen. 1-7. Electronic systems and equipment. In terms of revenues, 92%. Adjusted operating income increased only by 0.4 billion yen. There was an increase in revenue at Hitachi High Technologies, and a deconsolidation of Hitachi Kokusai Electric. But regardless, in the absence, it will be 108%. And if we reduce the deconsolidation of Kokusai Electric, it would, in terms of EBIT, improve by 10.1 billion yen. In terms of there was increase in clinical analyzers and semiconductor processing equipment. Also, a sales increase in radiation therapy systems in healthcare business. In terms of operating income, Hitachi High Technologies and healthcare business increased in revenues. Improvement by 0.4 billion yen in terms of adjusted operating income. Construction machinery sales increased in Asia Pacific, North America, and China. In line with this, operating income improved by 15.7 billion yen. (1-8). High functional materials and components. Revenues increased by 8%. Thai storage battery acquisition by Hitachi Chemicals and Hitachi Metals acquired Santoku rare earth metal manufacturers, leading to increase in revenues. Hitachi Metals experienced an increase of sales price linked to higher raw material price. On the other hand, in terms of operating income, there was a change in product mix, and at Hitachi Chemicals decreased by 3.3 billion year-over-year. In terms of operating income, automotive systems revenues decreased by 2% because of sales decrease in North America. In line with this, operating income as well as there was decrease in revenues having an impact, and profitability deterioration in North America has had a negative impact for operating income line. The improvement has been delayed, and therefore deterioration by 14.4 billion yen. For EBIT, because of the declining operating income, there was a posting of impairment loss to the tune of 20 billion yen. So productivity has declined in North America as well as Mexico. We had to post impairment losses. Next, 1-9, Smart Life and Eco-Friendly Systems. Revenues shrunk to 88%. This is because the change of accounting to net basis revenue for a part of procured products in Japan. For adjusted operating income, impact of foreign exchange, increase in raw material prices such as steel had an impact of negative 2.1 billion yen. Corporate items and eliminations. EBIT was significant at 54.7 billion yen. This includes gains by selling of Hitachi Kokusai Electric stock of 32 billion yen.
Slide 1-10 summarizes the situation in regard to the progress of the Lumada business. Lumada business in the cumulative second quarter of 500 billion yen of the revenues, and which is 11% up year-over-year. There is a positive growth, particularly for the industrial area, and the finance area solutions were performing well. Lumada core business was 1.5 times, 152% year-over-year number. And there are two industry examples and one example in finance industry that we were able to show on this slide. In regard to the industry, we were able to provide the solution called IoT Compass was launched for optimizing the whole manufacturing process. Toyota Motors the improvement of efficiency of a production model, which we were able to develop together. And also, AI-assisted predictive maintenance service was launched for the Showa Denko's ethylene plant, so that the improvement of efficiency in operation and maintenance is now being pursued. For finance industry, we started to launch the AI-based data analysis being provided, which is provided to Dai-ichi Life Insurance, and also through the know-how and knowledge accumulated through Hitachi Health Insurance Society, we were able to provide the risk simulation model. And in order to expand co-creation in Southeast Asia, we have launched the Lumada Center in Thailand. On top of that, the largest manufacturer in Thailand, Siam Cement Group. Together with that, we were able to launch the energy savings across factories and increase efficiency in dispatching processes that we were able to co-develop or co-create together with the manufacturer. And there are two examples in regard to the business structural reform and strengthening management basis. We were able to make press releases today, so I think that you are able to see the consolidated company, 63% of the stake. The Clarion was now to be offered to Faurecia Group. We decided to participate in the tender offer to them in order to further accelerate the growth and try to increase the corporate value. And for the tender offer, which we will obtain the proceeds, and that funds will be reinvested into our social innovation business, or perhaps in the automotive system, where the particular type lines of business which we should invest more were based upon our medium-term business strategy. This Clarion tender offer is a part of such initiative. And we will reorganize the large-sized industrial equipment business. One of the BU industrial products is going to be divestitured and being a spin-off, and by allowing the prompt decision-making, we will be flexible and we will increase global competitiveness. And we will make investment for the global business expansion. Headquartered in Taipei, escalator company, Yuntai engineering company, which we will conduct public tender offer. Yuntai and Hitachi, China, business where we operate in elevator escalator business. We will expand the product lineup, and by enlarging the business we can enjoy higher cost competitiveness, and in that we will expand the business of new installation as well as maintenance services in China. This is one step toward a truly globalized company in our business. Next, moving on to 2-1, we will be summarizing the forecast for the March 2019 for FY2018. In the second quarter, compared with the first quarter, automotive systems as well as Hitachi Chemicals, where the products-related business was rather struggling. But on the other hand, information system and social infrastructure and construction machinery, solution-based or the social infrastructure type of business was enjoying higher profitability, and we were able to augment and recover the losses in the profits in the product line business. But for the rest of the year, it is very hard to project the forecast, and therefore we will maintain the previous forecast. However, segment numbers are going to be revised, so I will elaborate on that later. The revenues forecast is 9,400 billion yen, and adjusted operating income is 750 billion yen, and operating income about 8%, and net income attributable to Hitachi Ltd's stakeholders is 400 billion yen. The forex assumption for the second half is 105 yen to the US dollars and 130 yen to the euro. Moving on to 2-2. In the middle, toward the right, we have a previous forecast comparison, which shows the differences from the first quarter forecast. For information and telecommunication systems, system integration business were performing quite well. Reflecting upon that, we increased the adjusted operating income forecast by 6 billion yen. And for the construction machinery, there were improved performance, and therefore 2 billion yen upgrading of the forecast. And next slide, automotive systems. Productivity improvement was rather lagging behind. Reflecting upon that, a 10 billion yen downward adjustment for adjusted operating income. And corporate items and elimination, there is positive 2 billion yen adjustment made. And as a result, total forecast is flat. The 750 billion yen remain the same. So that's the forecast which we announced today. So that is all from myself. Thank you.
We will now take questions. Question. Thank you very much for the very detailed explanation. I have basically two questions. First question is regarding confirmation of numbers, referring to page 34 and page 35. The second quarter results are shown here. If it is possible, please talk about the operating income for the second quarter. Against the forecast, how did the segments fare? That's my first question. Now, answer. Now, on a cumulative basis, against plan, in total, 14 billion improvement over the plan was achieved. By segments, information telecommunication system, 9 billion better than plan. Social infrastructure industrial system, 6 billion improvement. And electronic systems and equipment, 5 billion. Better than plan. Construction machinery, 4 billion. Improvement over plan. Regarding automotive system, underperformed plan by 11 billion. And corporate items and eliminations, 1 billion better because of expense reduction. And total is 14 billion improvement over the plan. Question. This is a qualitative question. Performance has been very good for the company, but valuation in the stock market remains very difficult globally as well. What are these factors driving this? There is the Horizon project. There are also litigation remaining. And from the last quarter, the Mexican situation remains a concern, or rather, there is a lack of visibility in these three areas. That is perhaps the reason why valuation is not so favorable for your company. So please talk about Horizon as well as pending litigation and Mexico. And can you give us an update? You said that the asset was 270 billion was mentioned last time. Can you supplement more information regarding the time frame as well as scenario analysis relating to Horizon? What are the likely scenarios we can expect going forward, which will serve as reference for us? It would make us very happy if you can share this information. Answer. Regarding Horizon and South Africa are considered to be risks and perhaps having a negative impact on the stock price. And I agree with your assessment. However, there isn't a significant update that we can share with you. In terms of Horizon, on a continuous basis, we will continue to discuss with the UK government in terms of the formation, investment, and others, support measures, as well as risk allocation. Consultations are continuing. Therefore, I cannot specifically talk about the future scenario because we are still in consultation phase. But we have been saying that economic rationale will be the basis of decision making, and this will remain unwavering. There are three factors. First is to take a finance system which will incorporate off-balance sheet, and also the investment will have to be within appropriate range, and appropriate returns must be obtained. So economic rationale will be the basis of final decision making. Now, regarding South Africa, we have gone into the arbitration phase now. Therefore, there is nothing that we can mention. Now, third question regarding Mexico. Please elaborate. Question regarding the automotive system. There is a slowing down of business. How will the operations change going forward? Answer. Regarding the plant in the United States as well as the plant in Mexico's productivity has deteriorated. We are sending experts from Japan in terms of production. And improvement measures are being implemented, but it still takes time for improvement. That is the reason why we have this result in the second quarter. In terms of the improvement measures, for one, cost structure will have to undergo significant fundamental change. In April, we have a new president, Bryce Koch, is implementing various measures. He is reviewing all the cost structures in terms of direct, indirect cost, as well as variable, fixed cost. All costs will be subject to a review by the new CEO. Operations will be subject to fundamental review. And asset as well as asset efficiency will be subject to review as well. And through this process, we will consider assets that we can dispose of. We will make progress in that regard. In terms of product structure, we will select and focus. This is not just a short-term measure, but this is also a mid to long-term strategy for us. The areas of strength as well as high profitability areas will be receiving more resource allocation. And the Clarion divestiture is part of the strategy for the mid to long term. In terms of the operations, now Mexico as well as South Africa is taking some time. But the new CEO, Bryce Koch, has embarked upon reforms, and we hope to harvest going forward. And growth strategies will also be pursued as well at the same time.
ございますでしょうか。では入り口側の前から2列目の方。すいません。
Question. First, regarding automotive, particularly North American business, there are several questions. In the first quarter result announcement, mentioned that vis-a-vis the internal plan, there were 5 billion yen downward performance, and the 11 billion in during the first half, so probably 6 billion perhaps for the second quarter. Perhaps you are rounding down or up the number, but it seems that the downward revision seems to be becoming bigger. Are there any one-time impact, or are there any reasons I'd like to explore? And as you mentioned earlier, first half 11 billion, and then for the annual forecast, downward revision of 10 billion. Therefore, in the second half, are you thinking about positive revision? Can I take your feeling? And another question, impairment loss was posted affecting EBITDA, but for the full year basis, the OP was revised. However, EBITDA wasn't revised. Therefore, in the second half, do you expect some upside on the EBITDA? Answer. During the first quarter, there are continuous business in U.S. and Mexico. Improvement productivity project, there are some lagging behind. That was continued, and also part of the customer base, the sales was added on as the new negative factor as a result. And another factor is that even in the domestic factories, there were some losses, big loss cost incurred because of the lower productivity. These were the factors contributing the larger lower performance in the first half. Are we going to see some improvement in the second half? That was, I think, was a question. As I mentioned earlier, fixed costs and variable costs, all kinds of costs are going to be reviewed. Such countermeasures is in progress as we speak. By harvesting all these efforts, we will try to improve the performance and projecting all of that. So 50 billion yen of a 5.1% of OPM. But that situation is very tough. The tough situation remains the same. Now, EBIT of 50 billion remain the same. As is announced earlier, the client's equity transfer, share transfer, is expected. And before the end of this fiscal year, this transaction is going to be closed. And then sales price of the equity is going to be a total of 90 billion yen. But the portion which will be affecting on our the non-operating profit is going to be 65 billion. We will closely examine these numbers going forward, but one of the positive factors is posting the non-operating profit of about 65 billion yen. And negative impact is, on the other hand, that currently we are reviewing all these forecasts and the numbers, and according to that, there might be some losses posted on non-operating basis. We will have to closely examine the number overall. And on the whole, automotive system EBIT was remained the same. Question. Earlier, we mentioned that for the first half overall, 14 billion increase, and Forex, foreign exchange rate, was probably working in a way that yen was weaker than expected. In this 14 billion yen, could you elaborate on the breakdown of Forex impact versus associated with a particular project, and there are some front-loading or postponement of the project, and that affected EBITDA? Could you explain? There are some benefits out of the foreign exchange rate by about 14 billion yen, and yet overall 105 yen to 110 yen. So 5 yen weaker over yen to the US dollars, and we were able to enjoy a margin out of that. But automotive system was underperforming, but on the area where foreign exchange rate wasn't affected, for example, information systems were playing better than expected. And also major items, first half to second half, major ones are adjusted already. So therefore, there is no change. So total of 14 billion yen. Thank you.
Any other questions? If there are no further questions, we would like to bring this meeting to a close. Thank you very much for your attendance today.